Hello everyone, I hope you guys are having a wonderful day here. I'm just going to give and start, not give, sorry, start the market recap. So overall, it looks like we had a very choppy week. Very choppy. Look at that weekly candle. It was okay. It looks decent, but on the on the intraday, it's kind of like all over the place here. We're gapping up, we're gapping down every single day. And I was just looking here at the smaller time. I was actually on the 15-minute, but right now it looks like we could have already bottomed out, possibly in an ABC flat, right? Some charts are a little bit different. So the Dow Jones looks like it played out like something like this, right? And now we are impulsing out. So this is good. This is looking good. Like if it wants to go 1, 2, 3, 4, 5. So next week should be a gap up, right? Should be a gap up, but we continue to pump. That is my guess based on the chart that we have in front of us right now. We had a potential of going lower, and again, it did not materialize. All it did was come back down, take out this low, and then you had yourself a little bit of a flat. Now that we're impulsing out, we can give ourselves a target of where this is going to go. Okay, so now we are looking at 427 to 435. It's a big range. Big range. But this is the area of interest. This is where you want to be careful, right? We are already, let me look at the 200-day, at resistance. If you come up and you come down the same week, that's a bad look. That's a really bad look. It shows that we are unable to break the 200-day moving average and sustain above it. If we manage to stay above it and retest that support, yeah, you actually have the potential of having this wave 4 already in. Right? You technically did erase all divergence. You could be off to the races and new all-time highs are coming. But there's a risk of a double correction, and that's what we're looking at for here. We're looking for the risk of a double correction because it can take us much lower, and the downside risks are very big because in a panic sell-off, fear is high. You don't want to be on the wrong side of the trade. So for the bear case, this is the bear case. The bull case, the low is in, and you're just going to go straight up, right? Let's take a look at the SPY. Very similar chart. Very similar. All the indices are pretty similar, I would say. ABC. You have an ABC correction, another flat. Took out the high here, and you came back down. Made a new low, never hit the targeted area. And again, flats are difficult. Let's see where we are at right now. Target has moved down a little bit. So 578 to 590. That is what we're looking for. And we're impulsing out. We had a nice impulse at the close. So we're looking for 5 waves up. Right? Good. Now we know we're going up. The Qs. Little bit of a tougher chart. Because we never took out the highs. Right? The Qs, you could say that the X is in. And this is an ABC, which is also fine. And you're going to do this. You're going to do a 1, 2, 3, 4, 5. Right? And it's really, I think the target for this one has not changed. Yeah. It's basically, yeah, maybe I was a little bit off when I charted it initially. So it's pretty much the same thing. So we're looking for what? 491. 491 to 503. It's a good, decent pump, like 2-3% pump. If we just blast through this level, you know the low's in, and you buy on the pullbacks, and you just get long, and bull market's back, baby. But let's see how this is gonna play out. The IWM also very choppy. Now we could actually calculate a better targeted area. Because the IWM was kind of on the fence. But 210 is a nice rally, right? Nice little rally here. Up to 216. Decent sized rally. come up another 5%. So IWM is a little bit more bullish. The small caps are looking favorable right now. A, B, C, ended with no divergence. You know it's 3 waves up. So the C leg, crash correction, no divergence, perfect. Now we know that we should be going higher. Okay, that's it. TLT, we'll take a look at TLT. So the bonds, in my opinion, need to come back down into this area. This would be a nice dip buy area for us. Again, I don't think the target has changed. I'm pretty sure I charted it yesterday, but this is the targeted area for the bonds. Okay, let's move it up a little bit. So there you go. So 88 to 92. I think we have a great setup to get long, and a 1-2-1-2 setup, and then ultimately come back up to 97. This is yields going down, right? And the yields are in a buy area. But now you're getting 3-wave corrections all over the place, right? You're getting 3 waves here, 3 waves there. So it's so messy, right? And right now you could still be in a much more complex correction where it does this. You come up and then you come crashing back down, and then the yields will go. The 20-year goes back to 4% again, or even lower. It comes to tag this larger buy area that we never hit at 3.8%. So the bonds to me look like they want to go higher, but maybe one more dip lower before that happens. So that's the bonds for me right now. Targeted area is a little bit lower. And again, look at our previous trade history on the bonds, right? Longer term accumulation. We got long, if you guys were members, you were following me at the time back in 2024, we were longing TMF, right? TMF, which is a triple leverage ETF to long, right? The bonds. We were longing around 43 to 45. Right, and look how that played out. Over time, we went to 64. We got the trend exit signal, and that's when we got out of our positions, right? When I saw the TLT start breaking down right here, took out the lows, gapping down. That's it. We take our profits, right? We didn't catch the top, but we also got a great gain. We didn't sell at a loss. So now it's in the downtrend. It's in all this choppy action. We're recharting it again, right? And I think we have a good setup here. So a TLT I really like for a buy if it comes back down. SMH. The SMH, like all the semis, have a very similar chart. Looks like it wants to double correct higher, and it with no divergence. So now you should be doing another 3-swing move up. So 3 swings up, and this is your target up here. 244 to 257. Gold. Oh, my gold chart. I'll just get onto the gold chart here. So gold. To me, looks like it needs one more swing up. All right, but you did end it with no divergence, so just know I could be wrong, and you don't get this one more swing higher, and this 5th wave just ended and gold topped out. But we're looking for a top in gold, but it is in price discoveries, and we are still long from our dip buy area. Again, look where we bought gold. Gold was a buy at 2,840. We bought the UGL on this day, and look where gold's been running since then. It was an amazing setup, and now we're just holding. It's free money, right? We're just letting the winners run. Take a look at silver. Silver is next. So silver is kind of in a weird state where gold is running but silver isn't, right? And I think silver may be a leading indicator of where the economy is going and stuff like that, because it's not benefiting from the same rise in gold, and people are usually, when gold is going up, usually silver is going up, but silver is not going up, and you're really struggling here. So I think if silver doesn't take out this high and start impulsing out like gold, it's going to come crashing down, and it's going to come all the way back into this area here, which I have to adjust the target back to 28 to $24, right? And then the wave 2 could be in. So I still think we're in this corrective move because it's very choppy, it's not impulsive, and it's just grinding higher. It could just end up getting another drop, and if it gets another drop, either the dollar's going up or something's happening in the economy and people are just selling their silver. Taking a look at oil. Oil, again, bottomed out around this area. You had some nice divergence, kind of finishing up this fifth wave, right? Now you're inside of this ABC. It probably needs to go higher, and I wouldn't be surprised if oil goes all over the place. But between 70 and 72 is your targeted area, but it could also still be inside of the first A wave. So that's why I don't want to give a target just yet. All right, I don't really know. I don't think that the A wave is just finished, given the size of the move down we just got. It could still be an A, or A could have finished here, and you haven't gotten B, right? Divergence. So A could have finished, but you haven't gotten B, so you don't know where the C is gonna go. So that's why I don't really want to give a target. I mapped it as an A, B, C here, but really, you know, I wouldn't trade oil right now. I would be kind of sidelines. I would wait. Let's take a look at USD/JPY. So the yen hit our targeted area and got a massive rejection, right? A massive rejection in the yen. If the yen topped out and we're now impulsing down, this is really bad for the markets, right? Maybe it can chop around still a little bit more, but this means that you're gonna have that big rejection when we get into this area, because the yen carry trade is a leading indicator, right? And the market kind of does what the yen does. You know, the same day that the markets were pumping on the Fed day, remember? Pumping, we're going straight up. Where was Fed day? Wednesday. Let's see the candles on Wednesday. Monday, Tuesday, Wednesday. We had a massive pump up, right? Big pump. Tuesday, Thursday, Wednesday. Yeah, Wednesday, big pump. And you know what? Thursday was a big sell-off. Big sell-off. People are freaking out. And you know what? One day before, the same day on the Fed day, the USD/JPY was tanking in a free fall, and the next day the markets followed suit. Then USD/JPY recovered, and then the markets recovered too. So I think when you see the yen start to break down and really start to implode, you're gonna start to see the market continue to roll over. If this extends and chops around more, and you know just continues to grind higher, the market has more time on the clock. You're going to be fine. The markets are going to be okay, and it could continue to double correct higher, right? But we don't know to what extent. And if you get a really big chart breakdown, if you start to see the chart failing, then you know that the yen is about to roll over. It seems fine for now. Right now, it seems okay. It seems okay to me. So the markets could still have a lot of time on the clock. If you start to see the 4-hour cycle break, it's your early sign that the yen's coming to an end. The yen carry trade is coming to an end. But now, all good. Should see more upside. GameStop, I already did a whole video for that, so you guys could just go check that out. NVDA, same thing as the SMH. I think it could get another move higher. I just don't know if this B is in. But given how the Qs are trading, I'm pretty sure that this is in. And what you're getting here is a 1-2 setup, and you're just going to impulse out and extend the wave 2 up into this area. Tesla needs one more low, although it could still be in the 4. So we don't really know, and I don't really want to buy it ahead of time of my buy area. I just want to wait and sit on my hands. If my levels hit, we pull the trigger. If not, we sit on our hands. That's it. It's very simple. AMD, again, needs to get back up into the 113s, 120. Again, don't be too sad that AMD is in this, you know, this chop. I could be wrong, and it extends further, right? And it comes back into the resistance area of 125 or so and so. But you do have some technical pivots that you are trading against, and there's probably a lot of overhead supply. But let's see how the chart is going to play out. It is in a nice impulse higher. Once you break this 4-hour cycle, you'll know that the correction in AMD is going to continue down. So really, you just need to hold this upsloping trend line on the 4 hour. You still got lots of room to run, so it's not all bad yet. You can still chop around. As long as you grind higher, you should be good. Intel probably confirmed this wave 2 now. Intel should be making its way back down and taking out the lows at 19 in an impulsive wave. I don't know what the news is going to be, but it should be pretty bad if it's going to do something like this. NBIS, what is this again? Nuvius Group. Again, it's in a buy area. It's almost got invalidated, but if it's going to get a 3 swing up, it should do something like this. And finish in a B wave, and then one more low to really correct the wave 2. Then you may have a huge buying opportunity. We're going to keep keeping a close eye on this. You want to erase divergence. You want to just come back down and then bounce back up in a C leg. And then you have a pivot to trade against. I think it could come back down to 1765. Okay, we'll wrap it up with CrowdStrike. CrowdStrike is, let's see here, 4 hour. Oh, okay, you actually have 3 waves down only. So CrowdStrike could be in a more complex correction, which is not surprising given how the markets are trading. Let's see what our target would have been. Yeah, so I guess it would have been into the buy area, and now it's getting a bounce. And we need to see where this correction is going to end. A, B could be very bullish. Could actually come back up pretty significantly. A big rally, again, big rally could be on the table here for all of tech. Like look at that. This thing could come back up pretty close to the highs, right? This would be a tremendous rally in tech. This is kind of showing like, oh man, if CrowdStrike's going to do this 23% rally, there's got to be some great news on the way, right? So maybe there is a big rally coming in tech next week. All right, so that's it for this week. Hopefully you guys enjoy the videos. Have a great weekend. Peace.